I mean, there's tons and tons of studies now that say really you need to have some sort of guaranteed lifetime income to make sure you don't outlive that money, because a lot of us are going to have 30, maybe even 40-year, if it sounds crazy, retirements, right?
Yeah.
And so, yeah, that's a long time for that money to last. Welcome to Wealth Creator Radio, where we help people overcome the uncertainty of having enough retirement income. I'm your host, Eric Heckman, a certified financial planner with over 30 years of experience. We want you to enjoy life and not have to wonder where your money will come from and how long it'll last. My mission is to show you how to develop a personalized income plan so you can retire more and have worry less wealth. Here at Wealth Creator Radio, we cut through the noise and get straight to what matters. We understand that the world of retirement planning can be filled with confusing products, ever-changing tax laws, and volatile markets. That's why we're here to help successful people like you navigate the uncertainty and create a blueprint for a thriving, work-optional life.
Welcome to Wealth Creator Radio. If you have built wealth, do you know how to preserve it? Today, Eric Heckman, he's president of Heckman Financial. He is going to share with us some simple steps to safeguard what you have worked hard for and to make sure you have a good plan for the future. Thank you so much for joining us. This is Wealth Creator Radio with my friend Eric Heckman. He is a certified financial planner here to guide you about retirement and come up with a plan. He calls his plan the blueprint to worry less wealth. And you can get that plan along with the book that he has written in his toolbox. So we're offering the toolbox today and offering an appointment as well. You can set that up. Here's what you do. Here's the number. Put the phone number in your cell phone right now, 800-454-1184. You may call or text the word visit or text the word toolbox if you'd like to get that toolbox that includes the book that Eric has written and plus other resources as well. Remember, our show comes out every Tuesday now in podcast form too. You can just search for it on YouTube or wherever you get your podcast. Just search for Wealth Creator Radio. And thank you so much for joining us today, Eric. So good to be here with you.
Yeah, Luann, no, it's great to get some more information out there. And was this show 401? So I've been doing this for a while, right?
Yes.
And yeah, and really, there's a lot of people who make mistakes, but we're gonna go over some of the things and hopefully you learn from them, and so you don't do them, right?
Yeah. Now I want to talk about people who have high net worth, people who have a lot of wealth. What have you seen are some of the biggest mistakes they've made with their money?
Yeah, I mean, they're probably the number one thing. I mean, really, pretty much for almost everybody is not doing enough tax planning. Yeah, there's this big disconnect. Most financial advisors aren't like me, and they're not licensed for taxes, and so they say go talk to your tax advisor, and then you go talk to your tax person and you ask them about financial matters, and they go talk to your financial advisor, and they're both pointing to each other, and you're like, it's like watching a tennis match, right? You're just going back and forth, and okay, somebody needs to step up and actually answer the questions and help them. And so I think that's one of the critical things. Like lots of times, if you're making lots of money, you want all those tax deductions today, but are you going to be really in a lower tax bracket? I mean, if you're doing that well, you're probably not going to be in a lower tax bracket down the road. So should you just be biting the bullet and funding a Roth 401k versus the traditional? Usually I say fund the Roth still, because if it's hard enough to already get any tax-free money, you might as well get some money tax-free, because once you get to retirement and if you need a big lump sum one year, if you got a pot of tax-free cash, it's great. But if it's all taxable, then it's really tough. And then, probably the other thing is just really doing, some people do some estate planning, but they don't really get it enough, and they don't do enough of the more complicated steps of how to actually protect that money. And a lot of them don't actually look for enough alternative assets or alternative types of investments. And so, that are more tax focused. So again, it's a lot about taxes.
Yes, a lot about taxes. Why don't you kind of walk us through some of the tax strategies you use for people to make sure that, they're keeping more of their money working for them in retirement? We stop working, we don't get that paycheck anymore. So we have to come up with our own paycheck, and our money has to keep growing, and we have to protect it.
Yeah, certainly. So, I mean, one of the things with taxes is, like I said, Roth versus traditional 401k. So if you can have the stuff where you've paid the tax and all gross tax free, you don't have that required minimum distribution ever. So that's going to save you a lot of money. There's some other things. There's specially designed life insurance that you can put some of that taxable money in and then have it be tax deferred. And even if you structure it right, you can get tax free income for life if you need it, or even let that money go totally tax free to the next generation. One of the worst things to inherit by far, or the worst thing to inherit by far, is any sort of retirement money, because the next generation, they have 10 years to withdraw all that money, pay all the tax on that money, and this is typically when they're still working, right? So this is not when they're not retired, and so if they're still making some good money, and then you have to throw on this other taxable money on top of that in a very quick timeline, that can be pretty brutal for the next generation. So if you can mitigate some of that ahead of time, not only does it help you, but it helps the next generation. So yeah, it's really about having a plan, and that's one of the things we've built up here at Heckman Financial is, like you mentioned, that digital toolbox. The nice thing with that digital toolbox is, yeah, you can grab, am I paying too much taxes in retirement? Or, quick report. You can do, the Social Security timing decision. Lots of times, people, if you're wealthier, you probably shouldn't wait as long for Social Security. Might as well just get the money. If you're not dependent on it as much, get it and donate it to charity or use it, or whatever you need to do. But yeah, you want to have a plan for all that. And so you can also set up a time to set a time with me, Eric Heckman. So yeah, you can easily do that online. And then, even like you mentioned, a copy of my book, Worry Less Wealth. So all you have to do to get that is just text the word toolbox to 800-454-1184. Again, text word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
And you're listening to Wealth Creator Radio with Eric Heckman of Heckman Financial. So happy to have you along with us today. Again, Eric is sharing some really good advice with you today about, if you are a person with high net worth, what you need to be doing, making sure your money is protected. So you told us about legacy planning matters and how it's important when families pass their wealth on to the next generation. What's one of the ideal ways to keep wealth growing for the next generation? What do you see?
Well, I mean, part of it's just really something that's not as hard, but seems hard is just talking to the next generation, right? Just, have you had any conversations about money? Have you told them? Because lots of times people have no clue what their parents have, or, what it all entails. And especially if you've got higher net worth. I mean, I've got a client who he's been at NVIDIA for a very, very long time. And so he's done very well with their stock. And he's got two sons. One doesn't really pay attention to finances, and the other one is very into it. So with his son, who's into a lot of the financial stuff, that he's been bringing him in, talking to him a lot more. And that's really just good, because you need somebody who knows what they're doing. Because if all of a sudden your net worth goes from a couple hundred grand to a few million, you don't want to be like those, the child actors you always hear about, right?
Yes.
That
Yeah.
that get into all sorts of problems, and drug, alcohol, all sorts of crazy stuff, because all of a sudden they
Mhm.
have all this money from nowhere.
Right.
And so you see the stats on lottery winners, they're
Mhm.
horrible, of how many people actually keep that wealth. They spend it so fast.
Yeah.
So again, you want to make sure that that's, you talk about that. If you're worried about it, then there are ways to do it. I mean, I've got one client that was the mom, and then well, actually, first the grandfather and then the mom both passed away, but they knew one daughter was not good with money, and so they made the two brothers manage the funds for her, and we just set it up probably almost 15 years ago now, and so we've been managing the money and paying her out and all that stuff, but so for her, it's kind of like a job or whatever. She gets a paycheck,
Oh, yeah.
from this
Yeah.
trust,
Mhm.
and so she's, sometimes we do raises, sometimes we, pay out a little bit extras if she needs it and such. But,
Mhm.
it's really made that money last. And yeah, I'm pretty sure if she'd just gotten it all right away, it would not have lasted that
Yeah.
long. So, so that's the other thing to do is have, you can use trust and other things to stretch that money out. But again, you want to have a plan. So, that's one of the things is getting education first or talking to somebody. So if you want to set up a time to talk or, download some of that free information or a copy of my book, Worry Less Wealth, it's all at our digital toolbox site. So again, text the word toolbox to 800-454-1184. Again, text word toolbox 800-454-1184 or download directly at wealthcreatorradio.com.
If something's worth doing, it's worth doing right. There's a particular time of life this phrase couldn't be more appropriate. How can you know you'll live the retirement you've always imagined? After all, life can be so unpredictable. You've worked hard and saved. Watch your accounts go up and down with the market. Your advisor says, don't worry, you'll be fine. But you still don't feel confident. Eric Heckman at Heckman Financial has a checklist to help you find out if you're on the right track for retirement. If you can check all the boxes with confidence, you may be ready for retirement. If not, Eric can help you address any potential costly mistakes. To get Eric Heckman at Heckman Financial's complimentary checklist, call or text LIST to 800-454-1184. Call or text LIST to 800-454-1184. Firm offers insurance services. Investment advisory services offered through Heckman Financial and Insurance Services, Inc. Investing involves risk, including the potential loss of principal.
Hey, thank you so much for spending time with us today. I'm Lou Ann Fulmer here with Eric Heckman of Heckman Financial. Remember when you were working and you counted on that regular paycheck hitting your bank account either every 2 weeks or every month? It's awesome. Payday. For me, it's like, okay, I got my allowance, you can go spend again. For many retirees, though, predictable income is replaced by constant worrying about their portfolios and what's happening with the market and checking it all the time. And that can be nerve-wracking. But retirement does not have to feel like it's a roller coaster. Eric, I got to ask you, how are you with roller coasters?
I like them, but did always get car sick as a kid and stuff. So yeah, some of them, not as good. If they're the super crazy, the moderate crazy ones, I'm okay. But some of them are.
Yeah.
What's the one? There's one in Disney World that's that one got to me. It was
Space
in, I
Mountain
think
or
it's in the
something?
Animal Kingdom or something. It's
Ooh.
one where it stops and goes forward and backward
Yeah.
and all this
Yeah.
kind of crazy weird stuff. And
I'm
that one
like
was
you.
like, yeah, no,
Yeah.
yeah.
I
So
am like you.
okay, somewhat, but not the super crazy.
No need to go on a ride and then feel nauseous the rest of the day. That's
Yeah.
how I feel. Yeah, but roller coasters in retirement, and we're talking with your money, not quite so good. So let's
No,
talk
those roller
about
coasters nobody enjoys, right? And everybody
no,
goes,
no,
"Wee, yeah, the market's crashing, yeah," as you go
no.
down, right? Yeah, usually when
Nobody
you're going
likes
down a
it.
roller coaster, everybody's happy, but
Yeah,
pretty much opposite on stock market.
exactly. Right. So talk about why having that dependable income is so important for retirees instead of worrying about the ups and downs.
Yeah, well, you don't want to be just all of a sudden going, "Oh, can I not do this now? Can I not do this?" I mean, I remember years ago that I had met with somebody and he'd planned this huge, elaborate, like I think it was 6 or maybe 8 week trip, and he managed his own apartment building. And all of a sudden, there was stuff with the apartment building messed up, and so he had to cancel this huge trip
Oh,
just because he's mid 70s and managing his own real estate.
oh,
It's just like
shoot.
that's not how you're supposed to be retired. So
No.
yeah, you don't want to have those hills and valleys on your money because
Mm-mm.
that's a little too much, right? So
Right.
you need at least a good baseline. Now, hopefully Social Security stays around. Hopefully it doesn't get taken away. It's stuff we paid into, and the government's
Mhm.
supposed to give it to us. But there's
Mhm.
a lot of forces right now trying to take it away, and then there's issues with it down the road. So having some sort of other base of income on top of your that Social Security check, really the biggest goal would be to, if you can get most of the normal monthly costs covered, that's really the ideal goal. So you'd want to have some of that be guaranteed where it can't go away. So if it's a downturn, doesn't matter, you still have access to it, still can get it without any loss. There's lots of great products out there like that now. So that'd be one thing. And then just also having some money in what I like to call steady income, where it pays off good dividends, either monthly or quarterly at least. And so again, if you've got a lot of cash flow meeting that baseline type of stuff, maybe property taxes, Christmas, you always get those, those months that are a little lumpy, right, in terms of expenses. But so maybe you're not necessarily covering that, but at least you're covering most of the common monthly costs, and that's really what you want to be, because then the market stuff is for the fun big projects or the improvements or the bigger trips and stuff like that. So you don't have to be freaking out every time that you get to that drop and you know about to do
Yes.
that corkscrew or whatever, or
Yeah.
flips.
No.
Yeah, you want to have some safety from that.
So, we always say one of the number one fears for retirees is running out of money. We're all living longer. So I think people are worried about the fact that we're, living longer lives. We have to stretch that money out. And then we've seen market volatility, of course, inflation. We've experienced inflation again. So, talk about strategies that you put together for retirees to help ensure that their retirement income is going to last, is going to stretch as long as they do.
Yeah, so the what 30, 40 years of working, you're pretty much just funding a 401k, which is basically by rule 100% market money. And so you don't really get much education. You don't get much exposure to foundational items, stuff that's guaranteed. You don't usually focus too much on steady income stuff because you don't need to take money out. You don't need the income, right? So, first of all, just looking at your portfolio and saying, okay, how much is steady income? How much is in foundational? And what would foundational be? Foundational stuff that can't go away, not stuff that most likely won't. No, that's not, stuff that really won't, can't go away. So
Yeah.
it's
Yeah.
either banks or, if you're holding a bond to maturity, a lot of times people put money in bond funds. It's like, well, those can still go down. So we're talking about holding a bond to maturity is a little different. And then looking at stuff that's with insurance companies, not the variable stuff that's not guaranteed. So we want stuff that's fixed and or indexed, and those things can be some great tools right now. They've got maximums up to 10% that you can get, so they've got some great earnings. There's some that you can turn on a lifetime income and have that lifetime payout, just like your own kind of private pension in essence, right? So if you can have some of that money built up and it's going to last. I mean, there's tons and tons of studies now that say really you need to have some sort of guaranteed lifetime income to make sure you don't outlive that money, because a lot of us are going to have 30, maybe even 40 year, which sounds crazy,
Yeah. Hopefully.
retirements, right?
Yeah.
And so, yeah, that's a long time for that money to last. And, I mean, if you think about you're now having to support yourself for as many years as you worked, for as many years as you retired, yeah, you need to have some of that money guaranteed to make sure it's going to be coming in there, every year, and well, obviously every month even,
Yeah.
right?
Right.
And so so that's one of the things that we've built up actually here at Heckman Financial is in our digital toolbox. We've got a lot of resources. One of them is, will my money last as long as I do? Hey, right there, right? And am I paying too much in tax and retirement? Social Security decision dilemma. These are all quick reads. It takes you about 10, 15 minutes to check those out to get some really good education. And, also that you can get a copy of my book or even set a time to talk with me, Eric Heckman. So all you got to do, super easy, is text the word toolbox to 800-454-1184. Again, text word toolbox, 800-454-1184, or go online directly to wealthcreatorradio.com.
And we thank you so much for spending part of your day with us today. I'm Lou Ann Fulmer here with Eric Heckman. And so, some brokers and advisors are still recommending the 4% withdrawal rate. So I wonder what you think about that, Eric.
Yeah, I mean, it can be people like rules of thumb, right? They
Yeah.
like they like to try to make things that are complicated simple,
Yep.
and all those things work to a mild degree, right?
Yeah.
So they're not perfect. Technically, the 4% rule isn't supposed to be a static 4%. If you actually read the rule thing about it, is it's actually supposed to go up every single year with inflation, so it gets higher and higher. Which, if you look at the RMD charts for retirement stuff, the required minimum distribution, it's actually very much like that 4% rule in a way. So, it can be good, but really, that's not how you spend money. And so the reality of how you spend money is, I think, more critical. And if you really think about it, you've got your go-go years, which is usually your first 5 to 10 years of retirement. That's when you're checking off those bucket list items, right? That's Machu Picchu, that's the river cruise in, Europe, or, maybe it's hiking in a lot of the national parks and things like that, if they're still open. And so that's one of those things where you're gonna be doing a lot more stuff. You're gonna probably be spending more money. Then you get the slow go years where maybe you're doing a bus tour, not a hike, and you're doing a few less trips. And then you get those, probably won't go years. You could go someplace, but you probably won't. And so their spending is going to be a lot higher in those first 5 to 10 years. So if you try to level out that spending, you're going to be kind of almost broke early on for not wanting to do all the stuff you want to do. And then by the time you get older, okay, now I have enough money, I can go do it. Well, maybe you physically can't do it now, right? Or maybe it's not going to be something. So that's what you don't want to have happen. So you need more of a realistic, real income plan that really calculates all these different things in there. And that's what we do for people. So again, if you want to get that digital toolbox, have an appointment to set what time with talk to me with for a 15-30 minute phone call, all you do is text the word toolbox to 800-454-1184. Again, text word toolbox 800-454-1184, or download directly at wealthcreatorradio.com.
Be sure to like and subscribe to Wealth Creator Radio so you can stay up to date on ways to build your wealth and create a retirement you and your family will enjoy for years to come. Like and subscribe today and create your wealth for tomorrow with Wealth Creator Radio.
Hello again, I'm Lou Ann Fulmer here with Eric Heckman of Heckman Financial, where their mission is to get you to and through a worry-less wealth retirement. When we're planning for retirement, so many of us focus on, just growing that nest egg, okay? But having a large sum of money does not automatically translate into reliable monthly income. So, Eric, one of the points you talk about very first in your blueprint to worry-less wealth, your plan for retirees, is the income, right? The income plan. Tell us, what is that all about?
Yeah, well, just picture you're trying to build that dream house and you're thinking about what the view will look like, what it looks like from the outside, right? And all that stuff. But first thing you got to do to make it real is have a plan, right? Get those drawings,
Yeah.
figure out where the studs go, the pipes, wires, all that fun stuff. And,
very important stuff.
same thing with, with retirement. A lot of times people just are focused on what's the hot stock or where should I put my money today? That's not income. That's points on the scoreboard. You need to actually have cash flow coming out. And the math is 100% different than when you're having the money grow. Those ups and downs in the market, those roller coaster ride moments, those didn't really matter to you because you didn't withdraw anything. But when you're withdrawing the money, those really matter because if you're taking money out every month and there was 4 months that the market went down and 1 month it jumped right back up, well, guess what? You sold shares at losses for 4 months, and then those shares that you sold, they didn't come back up, so you need to have a different way to spend. First and foremost, the biggest thing is figuring out how much do you actually spend, right? And what's that real number? Because I find most people, it's at least 20 to 40% more than they think that they spend.
40%?
And
Wow.
yeah,
Oh my
40%.
gosh.
Oh yeah. I've had one couple that came in here and she thought they spent 6,000. He thought it was 12, and it was 13,500. I mean,
My goodness.
she was nowhere near, and so one
Who
of the
was the
things
big
is I like,
spender, her or him?
well, her giving money to the adult kids was
there you
what we
go.
determined was one of the big problems, and that was more lumpy. So she didn't think of that as an ongoing expense, but
Right.
yeah. So I think the best way to do is I have a little tool. It's just the no BS budget. It's super easy. You just take your last 12 months bank statements, add up all the withdrawals, and hopefully you're taking that money out once a month to pay off that credit card, so you don't even have to look at your credit card statement. So again, just add up all the withdrawals from your bank account, divide by 12. That's what you really spent. And I pretty much almost guarantee you it's gonna be higher than you think.
Yeah,
And
exactly.
so once you know that real number, then you can start saying, okay, how much do I have from guaranteed sources like in Social Security? And in case Social Security does get cut and Social Security does get trimmed back, which is very likely, then what happens there? Do you have any other guaranteed source of money, some minimum paychecks that are coming in for the rest of your life? So, that's the things that you can easily set up. And, that's what we help a lot of people set up, at least some money coming in the door every single month for as long as you live. And that can't go away in those down markets. It's protected. It's, so at least you don't have to worry about every up and down and figuring out what you should do this month or can't do this month. So,
Right. Yeah.
so that's one of the biggest things that people really want to be focused on is get that reality number, not the number they think it is.
Yeah, I love that reality check. And the math is really pretty simple. I think we can all do that math, right? It's a matter of just
Yep.
looking at things and addition. So talk about the steps that you would recommend people take when they're trying to assess whether their current retirement strategy is going to provide enough reliable income.
Yeah, so I mean, we've got a great tool here that's our retirement income planner. It's really nice because it knows all the different types of money. So Social Security isn't state taxable, but it's 85% federally taxable, and Roth, of course, is tax free. If you have stock brokerage accounts, you get cost basis plus gains. So those all have different tax effects. So you need to know those as you pull that money out and count for that correctly. And then you also need to have some inflation factors. And then you also need to have a little bit of reality check, right? Are you building in a fund? Because when you're retired, you can go off and have more fun. So if you're looking at what you were spending while you're working, but you weren't having quite as much fun, right? Now you get more time to do fun stuff.
Yeah,
So you're going to probably spend more.
right.
Things like, lots of times people pay for their healthcare through their paycheck. Well, once you retire, you're paying that, out of your own income. So is
Mhm.
that accounted for? So all those types of things. And, once we have that built into an income plan, then we can figure out what financial tool should we implement to make sure that money lasts. And so that's the correct way to do it. Most people are just picking tools and hoping it works versus having a
Right.
plan and then you figure out what tool you need. So again, that's one of the things we do here at Heckman Financial is try to educate people and try to get them that information that they need to know how to make smart decisions. So one of the things you could do is if you want to set up a time, 15 to 30-minute phone call, just tell us what you're worried about, what kind of things you want to have help with. We can sit down with you and go over that. And then if it makes sense, we can even take you to that next blueprint meeting where there's no cost or fee. We'll tell you where you're headed right now. And then only at the end of that second meeting do you decide if you want to work with us or not. So again, there's a lot of great information, a lot of stuff that we can do for you. So all you got to do is super easy is, either call and leave a message or text the word visit to 800-454-1184. Again, text the word visit 800-454-1184 or book directly online at wealthcreatorradio.com.
And we are so happy to have you along with us today. Thank you for joining us. This is Wealth Creator Radio with Eric Heckman of Heckman Financial. So, a lot of retirees, for some reason, think that their taxes are going to be lower in retirement. I feel like this is just some sort of little myth that's going around, floating around. Talk about how, the steps that current retirees or even pre-retirees can take to protect themselves against taxes in retirement.
Yeah, well, taxes in retirement, that is the number one cost for people in retirement. Everybody says it's healthcare.
Right.
I don't know why.
I don't either. I
So,
guess, I don't know. It's
I mean,
big
healthcare
expense,
can
I
be
guess.
expensive. Yeah.
Yeah.
And
Yeah.
especially if you end up needing nursing home, it could be,
Hmm.
10 to 12,000 a month easily,
Yeah.
but that's usually only for a couple years. And then
Yeah.
you also have a ton of medical write-offs. So
Yeah.
your
That's true.
taxes aren't quite as big then. But
Yeah.
but for the most part, hopefully that doesn't happen to you. But
Hmm.
but for pretty much everybody, taxes are going to be a huge hit. And
Right.
taxes can't go down to, ignore the politicians. We owe too much money. And even
Yep.
if they try to have the federal government spend a little bit less, we are so far out of whack that the only
Far.
way to do it is have more income, not
Right.
spending less. So that having the government have more income is the only way to do that is via taxes. So
Yes.
they're not going down anytime soon. Yeah. So
No.
what we want to do is make sure we're at least paying the least you can. One really dumb thing I see a lot of people get advice on 100% incorrectly is, and lots of times it's because they ask the wrong question. So they'll ask their tax person, should I take money out of my retirement accounts or should I take it out of my, savings or my investment accounts? And they'll always say savings or investment, defer that tax, defer that tax, defer that tax, right?
Hmm.
And just keep pushing it out year after year. Well, when they move the retirement age just from 70 and a half to 72, the government accounting office said that the government should make about 15% more money.
Are you
Now they
talking
moved it to
required
7
minimum distributions?
for the required minimum distributions.
Okay.
Yeah.
Oh man.
Because that year and a half difference, people were going to have bigger balances and then
Right.
they'd have to pay more tax. Well, then they turned around and, 2 years later, moved it to 73 to 75.
Yep.
So 73 if you're born before
Yep.
1960, and 1960 and after, it's age 75. Well, again, the reason they did that was not to be nice. They do that because they're going to get
For
more
sure.
tax money from you. So
Mhm.
if you go from 12 to 24% bracket, that's 100% increase. That's
Yeah,
not a little
yeah,
increase. That's a huge.
that
And
is.
that's what I'm seeing a lot of people in their mid 70s on track to do. So you got to level out that tax throughout your life, not just go low and then, skyrocket up, right?
Yeah.
And so that's what we're trying to protect people from. So, again, if you want to set up a time and really get some information, find out what you're, worried about, see if we can help you. All you got to do is text the word visit to 800-454-1184. Again, text word visit 800-454-1184, or book directly online at wealthcreatorradio.com.
Imagine for a moment that an intense storm is pounding your house. Will the roof leak? Will the siding peel away? Will your basement flood? If your house is properly built and maintained, you'll be fine. But what about your 401k or your investments? The stock market has had a great run the last few years, but is its current turmoil making you feel uneasy? Are you confident your portfolio is built to weather the financial storm? Now may be a great time to have your retirement plan inspected. Call Eric Heckman of Heckman Financial at 800-454-1184 now. Eric will examine your portfolio and show you if your investments are in need of some weatherproofing. Call Eric Heckman of Heckman Financial today at 800-454-1184. That's 800-454-1184. Investment advisory services offered through Heckman Financial Insurance Services, Inc., a registered investment advisor.
Hi, I'm Lou Ann Fulmer. So happy to have you along with us. I'm with Eric Heckman, president of Heckman Financial, and he helps retirees just like you have that retirement of your dreams, live that out. And right now, we are going to get to some questions that you retirees have. This is going to be a portion of our mailbag that we have on our show, the Wealth Creator mailbag. So let's get into some questions here, Eric. First question, Paul. He says, I'm still a few years away from retirement, but I have no idea what my savings target should be. How much do I need to save so I can have a comfortable retirement?
Well, yeah, thanks, Paul. And one thing I wanted to point out is people can go to wealthcreatorradio.com and actually submit questions there.
Aha.
So there's a little chat thing that you can submit a question on.
Love it.
But yeah, I mean, the magic number, I think, is always a dangerous thing because, yeah, like I remember when I was a kid, if you made $100,000, you were super wealthy, and now like you can get free tuition at Stanford if your family only makes $100,000, right? So, what if you start thinking about that number, you might hit it, and it might not be the correct number for the correct inflation, level, right? And so that's a little bit hazardous. I prefer to say, okay, well, how much are you spending a month, and what number do you need to get to that? I think that's a better way to go. Because then you can really look to see, okay, if I'm spending this much money, then this is how much I need. Because some people need $20,000 to retire a month, and I've got a lot of clients that retire at 3,000 or 4,000, and they're perfectly happy. So. Sometimes it depends. Do you have a mortgage, right? Do you have other things? And, do you like to travel a bunch, or are you just more somebody who likes to stay home and sick of traveling? Right. So a lot of it depends on that. So, I would say look at how much you're going to be spending, and then that's how you can back into that number.
Okay, cool. Here's another question from Keith. And he says, are rental properties a good source of income for my retirement? That's a good question.
No, it's a great question. And rentals are, can be good and can be bad. I've got a couple rentals myself, and, mainly from where, we kept buying places where my sons were going to school. So got a condo in South Carolina, a triplex up in Oregon, and it was a way to save money while they were going to school.
Sure.
and make some money off of it and such. But you get fun things like the hose from the washer.
Yes.
Dropped and flooded the place for 50 gallons of water.
That
Nobody somehow noticed. And,
Oh, no.
and then there's all sorts of other things that happen, right? And things that break or whatever.
Yeah.
So you got to watch that because of depending on how old the property, what condition, and what type of renters you get. You may have that income, but also that income may go away. Like actually, in our condo in South Carolina. They had a special assessment because they hadn't replaced the AC units in the roof since the 80s.
Oh, no.
And that special assessment was, more than half of the rent for that year. So,
oh, my goodness.
if you were depending on that income, that could be really bad, right? So
Yes.
that's the hazardous part, I think, a lot about having rentals. Now, one thing, it's one thing when you're working and, it's extra income, but when it's your only income or your main source of income, I think that's where it's a little bit more hazardous. I have a lot of clients actually switch things into these things called DST properties. When they do that, then they have some other company that's 100% running the whole thing. You're just a part owner.
Oh, okay.
And those tend to be a lot higher income, especially since depending on where your rental is, if it's especially California, you're usually not getting very high cash flow from that rental compared to the value. So if you take that value and get a lot higher, payout, then sometimes you can do that, and then you don't have to have those phone calls and the
Yes.
fun things. Even if you have a property manager, it's still a lot of work. So, so I'd always, watch that for people because it can be great, but that money can also go away or maybe go backward for a year or two as you're having to, fix things up.
Yeah. Okay. So that, I used to think that's what I wanted to do, but, I always hear it's always a pipe that breaks.
Yeah, it could also be damage. I mean, years ago we had some other rentals and they said the windows broke and the property manager went there and all the glass was on the outside of the building.
Okay. Yeah.
Which means it was broken from the inside.
The inside.
Wow.
Yeah.
How did that just all of a sudden happen?
Yeah.
So, again, it's one of those things about having a plan and getting some really good information. And so, that's what we've done here at Heckman Financial is we've created a toolbox that has, things like, will my money last as long as I do? What's the best time to time your Social Security? A copy of my book, Worry Less Wealth, and a place to set up the time to visit with me. So that's, again, all at wealthcreatorradio.com, or you can text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184.
And get this, Eric's been helping people just like you for over 30 years now at Heckman Financial. He is founder and president. Their main focus is to help you with your lifetime income in retirement. So they want you to worry less about that and then more about having fun and enjoying your retirement. So thank you so much for joining us. This is Wealth Creator Radio, where Eric and his team want to help you create that wealth in retirement. Not only the money part, but the wonderful things in life that you want to do. We're in our mailbag right now. Next question is from Vic, and he says, I think I have a pretty good handle on our financial plan for retirement, but I'm worried I'm missing something. I love this. You're going to love this question. Do you have some sort of retirement to-do list or a checklist to help me make sure I'm not forgetting anything?
Well, that one's pretty easy, yeah. Because no, we definitely do. You can actually text the word checklist to 800-454-1184. Again, text word checklist, 800-454-1184. And if I remember right, it's 34 questions. It's actually really hard to get all 34.
Uh-huh.
So,
yes.
So it depends on timing and some of the things, but it is actually a really great list of just things to be thinking about, things that you probably haven't necessarily paid attention to. There is a lot to do in retirement, and it's funny that people think it's like so easy because, hey, I'm not going to be working. Well, now you have to figure out where the money comes from. How much am I taking out of Roth versus IRA versus regular money? What's the deal with my healthcare, right? Is it pre-65 or over 65? Because pre-65, if you're trying to get some of the government, funded healthcare, you have to keep your income lower. And so then that makes it more complicated. So there's a lot of little hidden landmines that you have to watch out for and not step on in retirement planning. So yeah, having that checklist is actually, Vic, it's a great way to go. So yeah, again, if you want that checklist, just text the word checklist, 800-454-1184. Again, that number is 800-454-1184.
And we are reaching into our Wealth Creator mailbag with Eric Heckman. And I think last question probably here, Eric's from Sandra. And she says, I'm retiring in the next 5 years or so. Is it more important to max out contributions to my retirement accounts, or should I focus more on building up my emergency fund?
Well, so when I assume she's older. So,
Well, 5 years maybe.
yeah, right. Yeah. So, one thing that's kind of a weird thing that people don't necessarily always think about is once you're 59 and a half, all your money is an emergency fund, right?
Yeah.
Because all of your money is now accessible. Your 401ks, your IRAs, everything you can take money out of. So, there is no necessarily reason to just have some liquid money because, pre 59 and a half, yeah, you can't just depend on your 401k or IRA because you're not supposed to touch that, right? So, so then you definitely have to have a dedicated emergency fund. But once you're over 59 and a half, it could be anywhere. So, one of the things you could be doing is put that money into, Roth 401k or Roth IRA. That'd be a great place to do it because now you're building up money, but it's also going to be tax-free for the rest of your life. And, you can't do that in a normal savings account or, regular type of account for emergency fund, right? So, so that's one of the things to be really looking at. But again, it all comes back to having that plan, that personal income plan, the overall plan that's like what we like to call the blueprint to worry less wealth, where you have the income, the investment, tax, healthcare, and legacy plan all figured out. That's something we can help you with if you want. But if you want to get access to a lot of great materials and a way to set a time with me, Eric Heckman, all you got to do is text the word toolbox to 800-454-1184. Again, text the word toolbox, 800-454-1184, or download directly at wealthcreatorradio.com.
Thinking about healthcare costs, long-term care expenses, and income needs in retirement? How will you afford it all? And what can you do now to help ensure your loved ones will be okay when you're gone? Eric Heckman at Heckman Financial has access to tools and strategies that can help you pursue your retirement dreams without taking on too much risk with your money. Interest rates are the highest they've been in decades, so take advantage of this seemingly once-in-a-lifetime opportunity to help protect your retirement before it's gone. Learn about the tools and features available today that could provide bonuses, potentially adding up to tens of thousands of dollars in additional income when medical needs arise. Schedule your visit with Eric Heckman at Heckman Financial today by calling 800-454-1184. That's 800-454-1184. These opportunities won't last forever, so call now to help protect your future. 800-454-1184.
Hi, I'm Lou Ann Fulmer here with Eric Heckman. So happy to have you along with us today. And on our show, Eric and I often talk about challenges and risks that happen in retirement. And then every week on our show, Eric gives us a really good example of someone who has experienced one of those retirement obstacles. We also give success stories, but it's time now for a financial fail. So Eric, give us your latest story, please.
Well, this one, can it be a fail and a success at the same time?
Maybe.
It's a philosophical question, I suppose. But no, I always kind of jokingly tell people it's better to have a tax problem than a no money problem.
Yeah.
And no money problems, not fun. Tax problems still not fun, but at least means you have money.
Yeah.
You wouldn't have a tax problem if you didn't. So no, this is a couple that they've just done great. They a long time ago, just started buying real estate. And, in California, the Bay Area, it's pretty easy to do that and hold on to it long enough. You're going to have some good money. And so, they built up a lot of real estate. They, got a lot of cash flow coming from that. They're, just retiring now. And so everything looks great. Everything's doing good, except for they did such a great job saving in their 401ks and IRAs that when we started looking at the tax, it was going to be insane. So when they're around 70, they're in their late 60s right now, the taxes they owe will be about $100,000, which is a lot for, right? For somebody who's retired. That's because they're living off all this taxable money. The worst part is once he turns 73 first, their taxes will be $250,000 because now he has to take money out of his retirement plans. It used to be 70 and a half. Now it's 73. And they don't really need the money. They're not spending that much. They've, had a paid off house, all this other stuff, right? And then when she turns 73 and they both have their required minimum distributions kicked in, the tax is projected to be over $350,000 a year. They'll be making almost 3 times as much as they ever made during their career in retirement in their 70s. In their 70s, yeah, which sounds crazy. And just paying a huge amount of tax in it. Now, the nice part is they we do have a little bit of time, and we can be doing some Roth conversions. We can be doing some stuff to protect it. We can be taking some of their taxable assets and making that to tax deferred. And there are some strategies that we can do to, hopefully prevent this. But I see this lots of times where people were really successful and done really great. I mean, I'm seeing more and more people that have over $1 million in their, 401ks, sometimes 2 million. And that's wonderful, except for the tax bill. Nobody kind of told you how ugly and nasty the tax bill is going to be. And so, it's kind of crazy to think that, that your best income years will be in your late 70s, which makes no sense. So that's one of the things that to be looking at is how bad are your taxes going to be? Because you're not going to retire in a lower bracket. The government's not paying their bills. We've got so much debt. The taxes, no matter what politicians say, taxes will have to go up at some point. And, if they go up and you've got a whole bunch of money and stuff that has been taxed, guess what? That means you just lost a lot of money on all your money. Thank you for tuning in to Wealth Creator Radio. I'm Eric Heckman, and it's been a pleasure guiding you towards a more confident and secure retirement. Remember, my responsibility is to always do what's right for you, our client. Together, we can cut out that fancy-sounding financial jargon that doesn't help and focus on what truly matters for your financial future. If you're ready to take control of your retirement planning and build a personalized income plan, contact us at 800-454-1184 and text the word Toolbox to schedule a complimentary consultation. If you're looking for more resources and tools to build your retirement future, don't forget to check out that Wealth Creator Toolbox, your toolkit for a secure and confident retirement journey. Until next time, retire more and worry less with Wealth Creator Radio.
Information provided during Wealth Creator Radio is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. Eric Heckman offers investment advisory services through Heckman Financial and Insurance Services, Inc., a registered investment advisor. Any tax advice given as part of this presentation is not intended to be used and cannot be used by the taxpayer for the purpose of avoiding tax penalties or promoting, marketing, or recommending to another party any matter or transaction addressed herein. The views and opinions expressed in the program are not necessarily those of the radio station or its sponsors, and they should not construe as legal, tax, or investment advice. You should always consult the appropriate advisor before making any financial decision.